What's up guys, welcome back to the channel. I hope you're all doing well. If you're new to the channel, don't be afraid to like, share and subscribe. It does help the channel out. Our goal for 2021 is to hit the 10,000 subs, so make sure you're subbed. So guys, a lot of you have been DMing me on Instagram asking me what platform should you be using for investing, how much should you invest, and how to start investing. So today we're going to cover the beginner's guide of how to get into investing, starting from the start, so you can start your investing career. So let's get straight into it. So guys, as always, I want to answer 2 or 3 questions from my subscribers, starting with Chris Johnson. Do you know if you have to pay any tax when buying cryptocurrencies on Coinbase, or do you have to pay tax when you sell it? Thank you. So you must pay capital gains tax on any asset you sell, including cryptocurrencies. If you head over to revenue.ie, they have a manual on tax and duty, figure 1.3, and it states if a profit or loss on a currency contract is not within trading profits, it will normally be taxable as a chargeable gain or allowable as a loss for capital gains tax. So yeah, you do have to pay capital gains tax on any asset that you sell, including cryptocurrencies. So question number 2 from Sean Varian. Will Brexit impact much of the stocks? Surely not if the trading off the New York Stock Exchange. Yeah, you're right there. It won't directly affect the stock market, but it will affect EU investors investing in Europe. So to put it into brief terms, we were protected by the consumer protection laws of the UK, but now Brexit has happened, so we don't have the consumer protection laws of the UK. We have the EU protection laws, which is less. So I did make a video on this in relation to Brexit, so go check it out as it goes into a bit more detail. So question number 3 from Owen Hurley. Great video, love the channel. A lot of people speculating on some sort of market crash in 2021. Have you any thoughts on this, and do you see the Nasdaq dropping more than 10%, similar to the drop that happened in March? Now, dramatic drops comes as a result of economic factors. Economic factors such as the Great Depression, the recession of 2008, and COVID. In my opinion, I don't see a market crash coming so soon. What we seen in last year in March was something completely new to us. There was a big sell-off, people are buying tight roll, shops are completely empty. So that's not here this year. But in saying that, personally, I think the cost of the pandemic has been factored in yet. It's still ongoing. So there could be a little bit of a drop, but not as bad as back in March, because that was followed by a lot of panic selling. Yeah, so guys, so thanks for them questions. If you want your questions featured on the next video, all you got to do is be subscribed and ask a good quality question. So moving on to how to get started in the stock market in 2021. So guys, this will hopefully be a quick and clear video for you guys, just breaking it down into different sections. I will leave timestamps in the description of the video, just so you can go back and forth into particular sections of the video and get a better grasp of it. So some of the sections we'll be covering is what type of investor you are, what brokerage firms to use, how much money should you start investing with, trading strategies you should use, long-term, short-term, swing trading, and then to finish off, how to find good particular stocks using qualitative fundamental analysis, quantitative fundamental analysis, and technical analysis, and finding legitimate source of information for you to make the best decisions. So we start from the start. What type of investor are you? So there's 2 different types of investors. There's a passive investor and there's active investor. Now, a lot of people don't enjoy controlling their portfolio. They don't like the thrills of analyzing stocks, trading stocks on the stock market, and they just want to invest their money into somewhere where it'll make money for them. But that's okay, you're a passive investor, but at the same time you still want your money to make money for you. So how do you go about this? So the best thing to do would get into contact with a mutual fund or bank. This is where they do it for you. Now, majority of people that watch this channel are Irish, so I did it on Irish mutual funds. So some Irish mutual funds that you could consider would be Zurich Investments, Irish Life, or MoneyCube. Now these are mutual funds. So what a mutual fund is, basically you give them your money and they invest it for you. Alternatively, you could go to a bank and actually buy bonds. Now what are bonds? Bonds are essentially you lending the bank money in return for interest paid twice a year, plus your money back on a specific date. Now keep in mind, mutual funds don't come without risk. You can end up losing more than you put in, but they mostly return about 15 to 20% each year on a 5-year period. So what's the other type of investor? Now the other type of investor is the active investor. Now an active investor controls their own portfolio, buys and sells their own shares in their own brokerage account. Now all profits or losses you gained will be going straight to you. Now a lot of us would fall under the category of a passive investor, simply because you don't have time, you probably have kids, you work, so it is hard to get into active trading. But at the same time, you should consider mutual funds or bonds, as your money is working for you in the background. Now before we go on to the next section, I just wanted to talk about what is a stock, the basic explanation of what is a stock. A stock is essentially owning a part of a company. Now let's say you bought a share of NEO back in June. Now that share would have cost you around $6. So as the company progresses and grows, the valuation of the stock price increases. The same as if the company is doing bad, the valuation of the stock price will decrease. So this is essentially where investors make their money. The one share we bought back in June for $6, The company has progressed and grown, therefore the valuation of the stock price has risen. 6 months down the line, we sell that share, it's $56 a share now. We sell that one share and the profit we've made is $50. So that's just a brief explanation of what a stock is and what you're actually buying. So moving on to what type of brokerage is the best for beginners. So no, most of you would have heard of brokerage firms like Webull, Robinhood, M1 Finance, but unfortunately these are US brokerage firms. They can't be used by EU investors, but you can still use them to gain information. Now, one I use to gain information is Webull. So we'll take a quick look at Webull here. You can see straight off the bat there is a lot of information. You see you have your watch list on the left, you have your main graph in the center, and your financials, press releases on the right. Now Webull does offer a lot. You can see, we'll have a look at the markets page. You can see the top gainers, top losers. You can see hot ETFs. And you can see which industries are doing good on the daily. You can also see IPOs, initial price offerings of new companies becoming public. So that is also good as well. So yeah, this is one brokerage firm I use just for gaining information on new and upcoming companies, small companies, penny stocks and things like this. So definitely if you're from the EU, I would suggest downloading this. It is available on any iOS, iPhone, iPad, laptop. It has everything in one place and you can find smaller stocks that are going to progress in the future. Now on the other hand, if you're from the EU and you're an EU investor, we have brokerage firms such as DeGiro, eToro, Revolut and Train212. If you're completely new to investing, I would definitely suggest Revolut. Now this is a very basic but great place to start. Now it has all the main stocks on the New York Stock Exchange and the Nasdaq. It doesn't offer ETFs, option trading, margin trading. Now it is commission free, so it is a good place to start. We'll take a quick look at the app there now. You see it's nice and clearly laid out. You can see Tesla, Palantir, Neo. We go into Tesla. So $788 for a Tesla. Press buy. You buy whatever amount of shares you want. So it is pretty easy and simple. So yeah, if you're a new investor, definitely Revolut is the best place for you. So if you want a little more advancement, definitely I would suggest Train212. It's a bit more technical, a bit more advanced. It does offer marginal trading on their CFD investing account. So when you open a Train212 account, you open an investing account and a CFD account. CFD stands for contract for difference, so therefore you can do marginal trading. Some of the stock markets that are on Train212 would be the LSE, the London Stock Exchange, the NYSE and the Nasdaq. So this is definitely a step up from Revolut and a great place to progress to. Now I have recently moved to DeGiro just to explore options trading, bonds and things like this and marginal trading. So I wanted to give it a go and see what it's like. Now there's a couple of downsides to DeGiro. So one of the downsides will be you can only deposit through bank transfer. The second downside is that takes 2 days for your money to go to your bank account to their bank account. The third downfall would be DeGiro doesn't offer commission free trades. They do have low fees, but it does add up if you're a beginner investor. Alright guys, so moving on to the next section, how much should you invest? Definitely starting with a smaller amount of capital at the very start, just to get into it. You should start with something you're willing to lose and something you're able to afford to lose. So yeah, definitely starting with a smaller amount of money first, gain confidence, gain knowledge, and then start progressing in and putting in more money. Now if you don't have money to be starting with, definitely budget in your weekly or monthly income, maybe 15 to 20% of that income and putting it aside for investing. Yeah, so I won't put an actual figure on what you should start investing with. Invest in what you're able to afford. Everybody's budget is different, so whatever you're able to afford and start with, definitely go for that. Now before I go and explain these different strategies, I want to go through what is fundamental analysis and technical analysis, as it does play a part in explaining the next part. Now the reasoning for fundamental and technical analysis is always just to determine when to buy the stock. Fundamental analysis can be broken down to two different categories: qualitative and quantitative fundamental analysis. So qualitative is the qualities of the company, the pros and cons of that company. What has that company got going for them? What doesn't have that company going for them? What companies are in competition with that company? And then quantitative fundamental analysis is fundamentals that can be quantified. So this can refer to the cash balances, income statements, how much cash they have in the bank, how much debts they have, how much machinery they own, and things like this. So then technical analysis is basically analyzing the graph. Technical analysis, you'd use RSI indicators, MACDs, candlestick patterns, and things like this. Fundamental analysis, long term. Technical analysis, short term. We start from the start, short term. Now short term refers to buying and selling a stock within 1 year. So you don't hold it longer than 1 year. Basically you buy the stock, you hold it for a few months and you sell it. So that's a short term investor. Long term investment strategies are buying and holding stocks longer than 1 year. So long term investment strategies would use more fundamental analysis than technical analysis. Swing trading, now this is where it gets a bit complicated. So swing trading is pretty similar to day trading, but it's not. So swing traders would rely on technical analysis and indicators such as the RSI, the MACD, and the volume charts. So the RSI is close to the 32%, which is undervalued, and the MACD is shown in the red. So when you're using the MACD, you buy in the red and you sell in the green. So this stock was undervalued when it hit 30% and then rose up to 64%. Therefore, you could sell at $78. So if you bought at 75 when it was at 30% and sold when it was 78, so they don't rely on too much but a few indicators to determine when to buy and sell that stock. Okay guys, moving on to the next one, dividends investor. Now dividends investors are not too pushed about how much the stock price moves. They're only interested in the dividends that company pays. Now, a company pays dividends as a thank you for investing in their company long term. Now, dividends investors would rely on more fundamental analysis than technical analysis, as it's a long term investment strategy. They would look for well-established companies like Amazon, Google, Facebook that pay dividends, and their money is still safe when it's invested. Now, they do get paid quarterly from that company as a percentage of the stock price. Moving on to the next one, which is a day trader. Now, day trader is basically a trader who buys and sells the stock on the same day. Now, usually you would have to have 25,000 in your investment account to be able to day trade, but if you're under 25,000, you're only allowed to day trade 3 days in a working week. So me personally, the long-term investment strategy is the best option for beginner traders. Finding good quality stocks that you see potential in down the line is the best option. The other best option would be is the dividends investor, invested into blue chip stocks, well-established stocks that your money's safe in, and getting quarterly payments from that company as a form of dividends. But yeah guys, definitely long-term strategies and dividend investment strategies is probably the best way forward until you gain confidence in what you're doing. So now it's down to the final section. Where do you find good quality stocks and how do you pick the good quality stocks? So looking for upcoming companies to bloom is pretty tricky to find. So alternatively, you could do is look for stocks that have been adapting over time. We take a stock like BlackBerry. BlackBerry was leading the phone industry back in 2000s, but slowly got outdated by rising technology like iPhones and Androids. Now the stock price of BlackBerry has been falling gradually over the last few years. BlackBerry has now decided to adapt to the circumstances, moving away from phones and going towards autonomous driving software. Now they're working with a company called Baidu, one of the leading driving software companies in the world. So they are adapting through time, and now the stock is beginning to progress. Now the next thing you probably want to look at is where you see the world going in the next 10, 20, 30 years. Do you see the fall of fossil fuels? Do you see the rise of clean energy? Looking at sectors like the EV sector, the tech sectors, there is already 1 or 2 companies that are already taking over the space sectors. Also looking at sectors like the cannabis sector. Is weed going to be legalized worldwide in the next couple of years? Who knows, but it's good to keep an eye on it. So definitely looking down the line and seeing into the future would best benefit you for you making money. So basically sifting through all the bullshit to find good quality information is the best way to go. Legitimate source of information is the key. You're best to look at sources like Bloomberg, Wall Street Bets, Wall Street Journal, Market Beat, Market Watch. You can also go into companies' websites. Now all these companies are public limited companies, so all their financials have to be public. Now in these websites you can find raw data about every company, cash balances, income statements and things like this. But reading income statement and cash balances is pretty tricky, so I will probably do a video in the next few weeks about how to read cash balances and income statements of companies. Another thing to take into consideration would be joining groups. Now joining groups is a great place to start for you to find good quality stocks that you want to invest in. Just basically bouncing stocks off other people and getting other people's opinions is a great place to start. Yes guys, so that is it for today's video. Hopefully I broke it down for all the beginner investors out there. As always, I just want to mention our Facebook discussion group, Revolut Trading Our Journey, and also I've started a Patreon group for all the serious investors out there. So if you're serious about investing, go check it out in the link in the description. So guys, thanks for watching the video. I hope you enjoyed it, and I'll see you in the next one.